Hey guys, Jared Wesley here of Live Traders, and it is that time of the week again. It is lecture time. This week's topic, guys, we dig really deep into the mind, the trader's mindset. We're going to talk about the psychology of winning and how you can become a better trader by understanding your emotions, understanding accountability, objectivity, understanding your belief system, not playing the victim role in any capacity in life, but especially not in trading, okay? It's a very, very powerful lecture, guys, because we can sit here and talk about charts all we want. We could talk about bottoming tails and topping tails and pivots and wide range bars and trade management, all that stuff, right? That sells, right? All the charts is what everyone's after. That's the sexy stuff, right? That is not the stuff that makes money at the end of the day. The stuff that makes money at the end of the day is between the two ears, okay? And most of you are not doing a good enough job of understanding yourself objectively, and therefore you're playing the role of a victim. You're playing the role of somebody who doesn't want to admit the actual things they're doing wrong that are costing you lots and lots of money. So today, we dig deep. We go deep down into the rabbit hole. Why? Because if you can't look inside yourself, you're never going to be able to affect change. You're never going to be able to change your belief system. You're never going to understand that emotions control thought, not the other way around. Emotions control thought. But you have to be mindful of those things. So we're going to dig really deep. The lecture's a little bit longer, maybe 10 minutes longer than normal this week. And honestly, I could have gone 2 more hours on this topic. But if you really want to change, and I mean really want to be a better trader, a better person, more successful in trading, more successful in life in general, you must sit and listen to this lecture because I think it's powerful and I think it's important. And again, it's the only path to success. Charts are great. Charts are one reason that we can make money in trading and get to a successful point. But psychology, winning, understanding a winner's attitude and being objective and not being a victim is far, 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 far more important, okay? And I want you guys to really, really pay attention to this one. Maybe watch it twice if you have to, because there's way too much victimization going on out there. Everybody's a victim of something nowadays. Stop it. Stop the nonsense. Take responsibility for your actions, okay? And then, and only then, can you move forward in life and be successful. So, I hope you guys enjoyed this video. If you want a $1 14-day trial into the chat room, click the link in the description. Also, if you like this video, please click that like button, man. And also, if you like the video, click the like button and subscribe, right? Smash that subscribe button. I'm Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is the psychology of winning in trading. Learn thyself for market mastery. I feel like the integrity lecture a few weeks back addressed some of the psychological demons that maybe traders have or possess. But for some reason, after that lecture, I feel like I got more questions about psychology than fewer questions. So I thought it would be maybe appropriate, I didn't want to wait too long between these lectures, to do a lecture on psychology and really dig deep, right? Go next level, so to speak. So I will warn you that there are a few charts in here, but there are not that many. There's a lot of text slides and there's a lot of me kind of going off on a tangent, fireside chat style, if you will. So if you are one of those people that has to see charts, today's lecture is not the best for you, even though there are several in here. Okay? But before we get into the psychology, we have to start every week. We don't have to, but we do with, when will the insanity stop? When will it stop? The answer is never, because you guys are human beings. And you will continually for the rest of your lives do stupid things. I'm hoping to curb that, to have fewer people do stupid things. This week, I have 2, and I think they're doozies. So I'm not going to read this whole email, but I'll just get to the crux of it. So somebody here put $35,000 into their trading account to avoid the pattern day trading rule, which is fine. I don't see any problem with that. Then on January 13th, 2020, not that long ago, they bought INPX and went on to take a nap. I don't make these up, okay? Went on to take a nap because they just had a new baby. They woke up an hour later and their account was down $19,000. At that time, I wasn't sure what a reverse split is. Then I let the money sit, do some studying. By the time I got out of INPX, I lost $28,000 on a $35,000 account. Okay? $28,000. Also, another reverse stock split on CHK. I'm losing, and this was, as of a week ago, $7,000 unrealized. Now, obviously, CHK bounced significantly recently, but that's not the point of this. The point of this is this person lost $28,000 of $35,000 in their account. So that's about what, 80% of their account? Somewhere in that neighborhood? 80% of your account. One of these days, I don't know when that day will come, I might be old and gray by then, you guys are going to understand that stop losses are important. All right? Maybe not to be sarcastic, I'm going to get a backlash for saying this, but stop losses matter. Stop losses matter. Okay? In trading, they do. This is no joke, guys. 80% of your account in 2 days? Think about that. How long did it take to make 35 grand and you were just willing to piss it away in 2 days because of stupidity? It's not cool, all right? And this is why this industry gets such a bad rap at times, because people do foolish things, all right? It's not the industry, it's you, which is leading into the topic we're going to talk about today, all right? And this person admits, I have no plan, I have no stop losses. I tried to learn to use stop losses, blah, 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 okay? Guys, do your homework. Do some due diligence. Learn this business properly. I love it when people say, yeah, I'll get the education after I start making money. It's like, well, I hope you're not a doctor, because it's like I'm going to operate on you before I learn how to be a doctor. Before I get an education, I'm going to just experiment on you. Not me, I hope, but somebody else. Okay? Next, this one is worse than the first one. $103,000. 88.67% of their account. Okay? So again, you guys still think stop losses, you still think money management's a joke. Okay? So GNUS, which is actually a stock we had on the list today. This person apparently is in this stock at $9.80. And I think, what was GNUS today, in the fives somewhere? Wow. I don't know. Is it fun losing 88.67% of your account? Losing six figures, over $100,000. Guys, at this point, you're just drinking the Kool-Aid, just hopium. There's no rhyme or reason to your trading if you're willing to blow 88% of your trading account on any trade. Any trade. You have no money management. You're just a pure gambler. You should put yourself into Gamblers Anonymous, and that's not a joke. It's not haha. It's not funny. Okay? If you do this kind of stuff, trading isn't the business for you. That's like being an alcoholic and working at a bar. I mean, seriously. That's like literally being an alcoholic and taking a job at a bar. All right? That's what some of you guys are doing. So if you are a gambler, this business isn't for you. All right? I didn't say a poker player or a professional. I said a gambler. Because this is real people losing real money. Okay? You just don't want it to be you. And most of this, no, not most, check. All of this is just pure stupidity. That's it. There's nothing else to say about this other than stupidity. Okay? Now, before we get into the main crux of the lecture, there's one more quick topic I want to talk about. It'll take like 2 minutes to talk about this. 3-bar plays happen every single day. I've been getting an influx from people saying, Jared, what scanner are you using? Because I can't find 3-bar plays. I don't know where you're seeing these 3-bar plays. They never happen, blah, 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 blah. This is just from today. Just from today. AAL, 15-minute 3-bar play. BA, 15-minute 3-bar play. Okay, next slide, just from today. CCL, 15-minute 3-bar play. DAL, 15-minute 3-bar play. Now, some of you might be saying, well, geez, Jared, DAA, DAL, AAL, they're all in the same sector. Of course, they're all going to look the same. So we take it one step further. PayPal, not in that sector. 1-minute 3-bar play. GES, we actually tried to take this today, if you guys recall, and we got, I say, hammered by the uptick rule. We didn't lose money. We just didn't get filled and the trade worked, meaning there was a 3-bar play here on the 1-minute. So it's not just the airline sector today or the cruise ship sector or any of that stuff. These things happen every day, okay? It takes scanning and diligence, putting together a good gap list, and then putting together a thumbnail watch list and actually watching your thumbnail list. And then just after that, it's just a game of waiting. That's all it is. Okay, so scan, build a list, put them on a thumbnail, and then watch and wait. Wait and watch, whatever you want to do, okay? 6 of these damn things happen just today. They happen every day, so I don't want to get any more emails about it. I use dollar gainers and dollar losers to scan, and that's that, right? That's that. Okay, now we're getting into the heart of this discussion today, and for some of you guys, today's discussion is going to be tough because today's discussion is going to dig deep into why you may not be a successful trader and you're just not able yet or ready yet to admit it to yourself. Okay? So we're going to talk about the psychology of winning, belief systems. Some of the slides, a couple of them you may have seen before, but most of the slides today are new. Okay? Most of today's slides are new. All right? So belief systems, what you believe has a dramatic effect on your outlook in trading and in life. Okay? This is factual, okay? We're going to also talk a little bit later about how emotions override thought. That's going to come a little bit later, how emotions override thought. But what you believe has a dramatic impact on how you view the world, okay? And some of that is what you've been taught. So some of your beliefs actually can be taught into you, okay? That's a common problem we have in society. We have schools, we have governments, we have parents, we have people teaching negative thoughts into people, okay? I'll give you an example. Some of you may have heard this from a few months back, but I was at a gas station, about 6 months ago now, last year, okay, the end of last year, and I was in the McLaren, okay, and I'm getting gas, and I see this kid. He's like, wow, what a cool car, on the other side of the gas station stall, okay? And his father said to him, don't look at that, son. Those types of cars are only for rich people. You'll never have something like that. This kid was probably 8 or 9 years old. Are you effing kidding me? You're going to tell an 8 or 9-year-old kid, don't look at that. You'll never have that, son. How do you know what that kid is capable of or isn't capable of? And you're going to put that thought into that kid at that age? That's a disgrace. It's an absolute disgrace. And I think it's systematic in some ways of our society. There's this hatred towards success now. It used to be admirable to be successful, but not anymore. And why? And I'm going to get to that on the next slide. Why is there such hate? Because it's how people view things. Okay? See, the rich see success as earned, and they view their opportunity as probable. Okay? The middle class see success as earned, and they view their opportunity as a possibility, sometimes probable. This isn't the issue. The issue is down here at the bottom. The poor see success as won or innate, right? And they view their opportunity as trivial, or in some cases a possibility, but not likely, not probable. Basically, to paraphrase this, and I didn't come up with this, by the way, and I forgot to cite it. So who's ever came up with this, I apologize. I completely forgot to cite this. These are not my words. These are somebody else's words, but I agree with them, okay? The poor basically looks at their situation in life and believes that rich people are just lucky. That's what they truly believe. And anybody who's read the book, The Millionaire Next Door, knows that statistically this is not true. Over 80% of millionaires in this country are self-made and received almost nothing as inheritance in this country. Read the book, The Millionaire Next Door. It's been out like 20 years, maybe more, okay? So if you aren't successful, or maybe you were born into a lower income home or household, this doesn't mean there's a lot of class mobility in this country, more than you think, okay? So don't think because you were born in a certain class that you are destined to be stuck in that class, because it's just not true. It's just not true. So the majority of people that fail, they fail because they make poor choices or have a poor outlook. And some of, not always, but some of that outlook has something that's been taught into them. And that's a challenge when you're young. If you have negative parents or you're in an environment that's negative, it's hard sometimes to break through that. Mindset is an incredibly powerful thing in life. And the problem with that sometimes is when you're young, you're impressionable. And your belief system can be altered by people that you look up to or respect. Okay? But you have to realize, I don't care who you are, you can do or be anything you want. There's no question. Some people start with a disadvantage. Some people start the race further back. That's unquestionable. That's undeniable. But that doesn't mean that you can't still be successful. Might it be more challenging for you in certain areas? Yes, it might be. But it still doesn't preclude you from being successful. Traders have this outlook. I'm going to circle this back to trading in a second, okay? A lot of traders come in with a specific or certain belief system, and because of that belief system, they approach trading in the wrong way. I.e., one belief system we see commonly is, oh, I'm going to get rich quick. I only have $3,000 to my name, but I'm going to turn $542 into $100,000 in 10 days. That belief is an inaccurate belief. It's not based upon any reality that we've ever seen. So you come in with this idea that's not based in reality, so to speak. And that hurts you because you prepare for a much shorter period of time to get to success. You don't think that you need much money. So basically you come in what? Overhyped, underfunded, and with unrealistic expectation. So that belief is very harmful. Just like telling a kid they're not going to be successful. That's a harmful thing to tell somebody. So that belief has a dramatic impact on how you see the world, in this case, how you see the trading world, okay? So now I want to move on to what I call victims. We'll tie it all in. It's all going to come back, okay? Now I want to talk about victims and the sky is blue, okay? Victims and the sky is blue. You're like, what the heck does that even mean? Okay, I read a really good article years ago. This is probably about 10 years ago now, and I'm stealing some of this from that article. But the general concept you'll get here. So in trading, we have a lot of victims, don't we? In life, we have a lot of, quote, victims. But in trading, we have a lot of them. What are some victim comments, okay? Oh, man, the market maker screwed me, right? They picked off my stop loss. Oh, my broker saw the order and they picked off my shares. They stop hunted me. Oh, I knew it. Of course, it's just Murphy's Law that the only trade that worked today was the one trade that wasn't shortable. It was hard to borrow. Damn my broker. It's my broker's fault because that stock wasn't hard to borrow. Oh, my internet went down in the middle of a trade for 3 seconds. Can you believe it? 3 seconds, and it caused me to miss that trade and I didn't get filled. Damn it, I hate Cox and Verizon. Gosh darn it, these damn companies, why don't you just say the sky is blue? Why don't you just say, I didn't get that trade because the sky is blue? Why don't you just say you lost on that trade because the sky is blue? Because if you're going to blame something, might as well just blame the sky. I mean, why don't you just blame it because your car has 4 tires? Damn it, my car has 4 tires. That's why I lost on that trade. Okay? Stop playing this role. See, most novices are extremely inconsistent. They're not profitable. That's normal. But what's not normal and what's really detrimental to your growth as a trader is blaming it on something that you have no control over or not taking responsibility for it. Okay? It's almost as if sometimes, you know how they use that phrase, misery loves company? It's almost as if people love a pity party. Feel bad for me. Feel bad for me. Nobody cares about you. I'm going to tell it one more time. Nobody cares about you. Okay? When something bad happens to you, you have a close circle of people that genuinely care. Everybody else goes, oh man, I'm sorry to hear about your dad. Hey man, what's for lunch? What's for dinner? That's how quick they move on from it. Because it doesn't affect them. And when something bad happens to them, you do the same thing back to them.
Let's just admit it. It's true. Okay? Everybody's an NFL wide receiver. Me, 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 me. Me, so me. You don't throw me the ball enough, right? That's what everybody is like in life. That's human nature to worry about yourself. We're selfish and we're greedy. Just admit it. Okay? So you were free, bringing this back to trading. You were free to take that trade or not take that trade. You chose to take that trade. That trade didn't work. Why it didn't work, we could discuss that all day long. Maybe it wasn't a good trade. Maybe an HFT shook you out. Maybe your platform went down. Maybe any one of those things. But you were still the person who took the trade, which means the responsibility falls back on you. Now, why is this important? It's important because understanding your actions, guys, is going to lead to awareness. If you're not aware, you can't change because you don't even recognize what's happening. So in creating this awareness, you're going to be able to recognize this victim mentality that you're putting forth. And it will hopefully lead you towards the possibility of stopping it. So it's only then when you have awareness that you can be objective in your self-analysis. The problem is the victim mentality is an easy way out for people, right? The victim mentality is just so simple. And it's what a lot of the general public, it's what TV, it's what politicians want you to believe. Oh, you're poor because of the system. It's not the system, it's you. This is America. You didn't grow up in Syria or Iran or Afghanistan. This is the United States of America. And guess what the greatest meritocracy is in America? The stock market. Because the stock market knows no race, no creed, knows nothing. It doesn't even know who's behind the computer. It doesn't know who's clicking that mouse button. So it can't be after you because it doesn't even know you. Okay? So when you realize that you are 100% responsible for your actions, you should actually be relieved. Why? Think about this for a second. Why should you be relieved? You should be relieved because when you accept and take responsibility, it means you're capable of change. See, think about this for a second. If you are truly a victim of something, and there are sometimes victims in life, but if you are truly 100% a victim, what does that mean? It means it's out of your control. Might as well just pack up and move on, because if you're truly a victim, you don't have any control. So even if occasionally you are the victim of something, it's a terrible outlook to take because it means you're resided to that outcome and it can never, ever, ever be changed. Whereas if you accept responsibility for your actions, it allows you to make necessary change because you're accepting it was because of me that this happened. And therefore, if it's because of me that this happened, it's also because of me it can be changed. But if you don't accept that responsibility, you're just, quote, screwed. So there's nothing productive at all about being a victim. Nothing whatsoever is productive about being a victim. Nothing. So don't play that game. There's just nothing good that's going to come from it. If that's the way you want to play, might as well buy a shack and go move to Montana like the Unabomber. Okay? Just go do it like Ted Kaczynski, because there's nothing life has to offer you if you're a victim. That's it. So stop complaining about market makers. Stop complaining about your lot in life. Why? Because that's your lot in life. Where you were born, the country you were born to, the parents you were born under, you don't have control over. But you do have control over your future. That doesn't mean it will be easy, but you do have control over it. Okay? So get the victim mentality out. Okay? Guys, let's be honest here in the trading terms. If you really thought, oh, that damn market maker, I knew he was going to screw me. If you really thought he was going to screw you, well, why didn't you just put a buy order down where your stop loss was? Right? If you knew they were going to come in and shake you out and go higher, why don't you place a buy order down by where the shakeout bar, the bottoming tail was on the shakeout bar? I mean, you knew it was going to happen, right? You were a victim. Well, you didn't, because you didn't know it was going to happen, right? So just admit it. You didn't know, okay? So stop. Just seriously, stop the BS. Accept responsibility for your actions, okay? Otherwise, just blame it on the sky is blue, because otherwise there's nothing you could do about it, Okay? Now, let's move on to another part of this. Failure. I'm sure there are examples, but I don't know too many people that are successful that have never failed. Again, there may be a few, but the vast majority of people that have achieved any level of success in life have usually failed at something or failed even at the current thing that they're doing. They just continue to do it until they succeeded, right? So when I look at failure, failure, in my opinion, is an extremely important part of success because failure is useful unless you play the victim, right? But if you accept responsibility for failure, you're going to learn a tremendous amount about yourself, about other people, and about how you can get ahead in life. It's not fun, but it's incredibly useful, okay? So like I said, most people who have succeeded have also failed frequently, many times, okay? So if you don't succeed, it doesn't mean you're a failure. It does not mean that. So don't think that way. Failure is a choice, right? Because you chose those actions that led to failure, you can now make adjustments that might lead to success. And again, it sounds like such a cliche. Failure is not final. It's not. The day you give up, well, that's final. But failure is very useful. Losing trades are useful. They don't feel good, but they're useful. Okay? So you need to have the proper attitude before you get into this so that you can see it through. It's not that you don't get frustrated. I'm not saying you're a robot. You will be frustrated. There are days you want to put your hand through the monitor. It's okay. But what did you learn from it? Okay, that's the key here. Now, the next step to this is, are you willing to do whatever it takes to be successful? So how hard and for how long are you willing to fight? The answer for most people is not long enough. Why do I say that? Not long enough. Well, just look at the statistics of success in this country. I mean, what is it? The top 10% controls like 50% of the wealth in this country? That's not just all inheritance. Get that out of your brain. Look at the top 5 wealthiest people in the world. None of it was inherited. None of it was inherited. Okay? So how hard and for how long are you willing to fight? What are you willing to give up to get to that point? Okay? I can't remember the gentleman's name. Okay? But I was reading about this guy who's worth like $800 million. This is maybe 15 years ago now. Okay? And everybody says, man, you're so lucky. You're so lucky. You're so lucky. Okay? And he looked at him and said, am I? Am I so lucky? And then he goes off on this, I don't call it a tangent, but off on this spiel where he says, okay, I'm going to tell you something about my life. And when I'm done, I want you to tell me if I'm still lucky. I work 90 hours a week. I've had a heart attack. I'm divorced. One of my children doesn't talk to me anymore. But yes, I have a lot of money. And he went on deeper than that. Okay? And then he asks at the end, do you still think I'm lucky? See, you judged me just by my net worth, but you didn't judge me by my whole entire life. Meaning, I gave up a lot to have what I have. And I made those decisions, and I'm okay with that. But don't judge somebody successful or failure just by the cover. Okay? So the point is not that you need to get divorced to be successful. That's not the point, so don't take it that way. It's what are you willing to give up? Because it will be a sacrifice. Most successful people have given up something at some point in their life, whether it's time, whether it's spending time with family, whatever it may be, sometimes it might be their health, okay? But what are you willing to give up? Again, back to that point, the majority of people that fail simply make poor choices or have poor outlook. That's a fact. They make poor choices. The average American spends 104% of their income. That's a poor choice. That's a poor choice. Okay? And I don't want to hear it, and I don't want to get off on a tangent, but I don't want to hear it. If you're born in America, you are lucky and you have privilege. You know that buzzword nowadays? If you are born in the United States of America, and everybody listening to this isn't, you have privilege. There are about 3 billion people in this world that are less fortunate than you, even if you are dirt poor in America. Even if you are in the poverty line, there are about 3 billion people in this world that have less than you, even if you are poor in America. Okay, being born here is like winning the lottery. I'm not saying it's easy to get ahead, and some people start way behind other people. But compared to being born in other places, do you want to be born in Haiti or Syria or Afghanistan or Iran or a gazillion other countries out there? Okay? Being born in the United States of America is privilege. Period. End of discussion. Let's move on. All right. Now, trading is a psychological game, right? Because this business preys on our emotions. Doing the right thing, which we talked about a couple weeks ago with regard to integrity, is not so easy sometimes because there's consequences to doing the right thing, okay? So one of the things, or one of the reasons that trading is so challenging is because it preys on our core beliefs, ego, bragging rights, self-worth. We put a lot into these things, more than we should, to be honest, right? We put a lot of stake into ego, bragging rights, or self-worth because that's our core. That's us. And if somebody insults you, you're like, oh, you're insulting my ego. I have to respond in kind. Okay? So the most important commodity you're ever going to manage is perspective. What did that person really mean? And does it matter anyway? What does a losing trade say about me? Nothing. Doesn't say anything about you. It doesn't mean you're a bad person because you had a losing trade. If somebody says you're mean, you can reflect and go, well, am I really mean? Is that person somebody I should be listening to? So have perspective on things. Okay, people are losing that these days. They're losing perspective. And in trading, you must have perspective because there's no way to move forward without it. All right? So now, I want to get into a couple more things. But before I do, here's a quote by Mark Cain I thought was interesting. The first step towards success is taken when you refuse to be a captive of the environment in which you first find yourself. Some of us find ourselves in really crappy environments. Some people are very fortunate. It's probably more fortunate than most if you're Bill Gates' son, if you're Michael Jordan's son, if you're LeBron James's kids. You're probably in a fortunate position, more so than many other people. Okay? So don't be a prisoner of circumstance, though. You can't change the parents you were born to. So don't worry about that. Worry about what you can change, which is what? Your direction in life. Now, certainly, it's more challenging if you grew up with crappy parents because they put crappy beliefs into you. And that's not good. And it might be more difficult. But it doesn't mean it can't be done. So don't think like that. All right? So let's move on. Considerations, and I'm going to bring this back to me here in a second. I'm going to go over a couple trades in a few minutes and also a tracking spreadsheet that's very telling for people. All right? So you don't know until you know. And I'm relating this to trading. This is true in life, but in trading, you don't know until you know, which means there are many things in trading that you can't account for until they happen to you. Okay? Trading is unlike any other business you've ever tried. The same rules don't always apply in this business. Bosses are generally a good thing. You don't think so, but try not having one and tell me how your trading is doing. Be honest about it. Ask yourself if there are things you've done in trading that there's no way you would have done had you actually had a boss. We all know it's true. A boss wouldn't let you do those things. They would restrict access to your trading account because you've proven you're not responsible enough to handle certain things. Okay? So yes, our plan is our boss, but what happens when we break our plan? Then, who is our boss? Meaning, who's going to put down the consequence on you? Who's going to make you accountable? The boss usually does, but if you don't have a boss, it's up to you. Most people don't do a very good job of keeping themselves accountable. Bosses are good because they keep you productive. As much as you curse them and don't like them at times, a boss equals productivity to you. Okay, why? Because the threat of accountability. It's that simple. Okay? Without the accountability, you're not going anywhere. So have a consequence system. There's no scapegoat in this business. The market does not discriminate. It just is. It's like the Wizard of Oz, but that was actually a person. So that's a bad analogy, right? The market just is. It doesn't care who you are. That's a beautiful thing because that means it's really, truly up to you. How beautiful is that in life? Knowing it's truly up to you and that nobody else is holding you back from success in this business. Now, I want you guys to take a look at something. All right? Take a look at this tracking spreadsheet. This is older, okay? This is probably like 8 years old, something like that. Somebody sent this to me, and they said, Jared, take a look at this and see if there's anything that you can tell me about my trading. I want a second opinion, an objective opinion about my trading. Now, granted, this person sent me like 2-3 weeks worth of this stuff. I picked out one day, okay? I picked out one day. But what I want us to do here is to take a look at this and break it down. So basically, what does this log tell us about this trader? Because this is a trade tracking spreadsheet. Wink, wink. I know you all use a trade tracking spreadsheet, don't you? Yes, we do, Jared, because keeping statistics is very important to success, like every business and every sports team does. Half of you right now are going, oh shit, I don't have one of those. Get one, okay? Get one. So this is one day and 11 trades, all right? So what are some of the things we look? We can start on the left and move to the right if you want. I mean, it's an easy way to do it. So one person says, wow, that's a lot of trades. I would agree, 11's kind of a lot. Somebody says, wow, look at the risk. It's very erratic. So the risk level is $98 on the first trade. The second trade's $171, $165. Then it jumps to $294. Then it drops to $144, then down to $70. So yes, wow. The risk level of this trader, even though it averages $155 individually on trades, it's all over the map. So that's the first thing we see, okay? The first thing we see, all right? What's the next thing that we see on here? Now, again, it's possible this could be an experienced trader. I'll give you a hint. It's to the left of the risk. It's somewhere in one of these first 5 columns, okay? What's something else that you see on here? All right, to me, it jumps out at me. Now, some of you, it may not, and it also depends on the level of experience of this trader, okay? I don't think anybody has it yet. Trade type. Trade type. Look how many different trades we have. We have a 2-minute high, a 3-bar play, a breakdown, a buy setup, a breakout, and a climactic. What is that? 1, 2, 3, 4, 5, 6 different, and a breakout. 7 different patterns. Oh, you said it? Sorry, Vlad. My apologies, buddy. This person is trading. There's way too many tools in this toolbox. Now, again, if you're an experienced trader, then you can have a lot of tools in your toolbox. But clearly, by looking at the rest of this sheet, this is not an experienced trader because they wouldn't be doing these things. So this is a newer trader with too much distraction. There's just too many damn trade types in here. I always tell you guys, pick 1 or 2 types of trades, right? 1 or 2. Master 1 or 2 things. Don't be a jack of all trades and a master of none. This person is taking too many different types of trades, okay? So that's issue number 2. Issue number 1 was the risk level was scattered all over the map. Now I'm going to scoot, because I can't spend too much more time on this, so I have a lot more slides to get through. I'm going to scoot all the way over to the end here, the last 3 columns. Mod stands for moderator, following Jared, following me, following Jeff, following themselves. So this person is following a lot of different people. Well, again, it's certainly possible. It's possible that all 3 people, Jared, me, and Jeff, whatever you want to call it, okay, have the same trading style, but it's unlikely, isn't it? So why would they be copying so many different people? Well, because they're scattered. We found that out with the different types of trades they take. We found it out with the inconsistency of risk. Now we're seeing it again with how many different people they're following, okay? Next and last, I don't know if it's last, but next is, guys, look at this. In 933, out 937. In 933, out 936. In 936, out 938. Guys, the first 4 or 5 trades are less than 5 minutes each, right? Then you have an 8-minute trade, a 9-minute trade, a 13-minute trade. I mean, this person looks really, really what I would call skittish, right? Jittery. This is a jitterbug. So they're in and out, in and out. Now, it's certainly possible this trade stopped, but it didn't. They lost 0.3R. Break even almost, 0.2R. So to me, it looks like this is a person that doesn't follow a plan at all. They don't even have a single 1R winner on here. There's not a single 1R winning trade. There's not a single 1R losing trade. This person's all over the map, right? All over the map. So my point in showing you this is you can learn a lot from your trading, which means a lot from your personality and belief system by looking at a trade tracking spreadsheet. And digging deep into it, you're going to see patterns. And I'm not talking about chart patterns, patterns in yourself. This person's all over. They took 11 trades in just over an hour. In and out, in and out, in and out, frequently in the first 10 minutes of the day. Tons of different types of trades, risk level all over the place, inconsistent. And they made $29 after 11 trades. Now, granted, the trade fees are high here, but keep in mind, this was a long time ago. See, you guys that are newer traders, you don't remember. In fact, anyone who traded in the 90s, you were paying $30 to $50 each way. You guys are spoiled, and you don't even realize how spoiled you are. It's like being born in America. You take it for granted, okay? This is what trade fees were back then. Not for everybody, but for a lot of traders, okay? So this person's all over the map. So what might these stats lead to? Trading plan adjustments, a shift in emphasis, long trades versus short trades. Maybe you're better on one side than the other. Maybe the time of day isn't conducive to your trading. Maybe you don't do well between 9:30 and 9:45. Okay? You might have to refine your management. Basically, guys, by taking a look at your tracking spreadsheet, it's telling you what's working and what's not working. But many of you aren't tracking your trades, and if you are tracking your trades, you're not going back and reevaluating your tracking spreadsheet, okay? And this is a different person. You saw this a couple weeks ago, but it comes down to that integrity. Difference between following your plan and not following your plan can be very, very, very costly, okay? Very, very, very costly. Now, let's move on. What do we need to consider when we talk about belief systems in trading? Well, we need to acknowledge first what some of those belief systems are, which means what type of personality do we have, right? Who are we? Now, I understand you're going to come into this business thinking you're something. Let the results tell you who you really are. I'm going to repeat that because it's profound and you don't think so. You're going to come into this business thinking you're a certain way or a certain type of person. But let the tracking spreadsheet and let your results prove to you who you really are. That person I just showed you on that tracking spreadsheet, they might wait 4 hours for a ride at Disney World, so they're patient. But in trading, they're clearly jittery. So, well, in trading is all that matters to you when you're trading. So recognize the fact that you're jittery and build a trading plan that's conducive to that type of personality style. Time constraints. Some of you guys have jobs. You can't be in front of your computer all day. You can't, you have to work. So build a plan, build a style, build a management around your time constraints. Your capital restraints. Not everybody has 30, 50, 100 grand or more. Some of you have 3, 5, 10,000 bucks. You're going to have to treat certain things a little differently, maybe with the number of trades you take, all right? Or scaling your risk much slower because of it. And then intangibles, what you might be good at or bad at. Maybe you're technically savvy. Maybe you're really, quick to make decisions, right? Intangibles. See, the thing is, and you guys have seen this slide, okay? There is no Holy Grail, okay? There is none. The Holy Grail is understanding who is really trading. And to do that, you have to be accountable, you have to be objective, and you can't ever be a victim. All right? Because you can't make change when you're a victim. We talked about that. So the Holy Grail is knowing thyself, understanding yourself, and making adjustments within that self. It's not that you can't grow and get better, but you first have to recognize your strengths and weaknesses. So that means there is not a singular Holy Grail. The Holy Grail is understanding yourself and then building a plan that's conducive to success around yourself. Okay? Now, this is a big one. This is a big one. And this is something that's afflicting, and I use the word not affecting, afflicting our society today. The power of emotion over thought. You ever have a Twilight Zone conversation with somebody? Ever have that? It's what I call the Twilight Zone conversation. What that is something is so far off kilter, so ridiculous, you just sit there and you're stunned in amazement. It happens frequently, actually. And yet, there are people that believe what they're telling you. Not everyone's just trying to pull your leg, right? I mean, I have them several times a week. Yeah, I'm seeing a lot of those right now in society at large, okay? Like people that believe the country's better with no police. There are some people who truly believe that. To me, that's a Twilight Zone conversation. This happens in trading as well, particularly when people try to justify something that's absolutely insane, like not taking a stop loss, like somehow thinking that's better, or winning on a horrible trade and then thinking because they made money, it's the right thing to do. Now, this brings us back to emotion. Emotions lead your thoughts, okay? Emotions lead your thoughts. Emotions are a biological reaction to things, okay? So my point I'm simply making is you can be a rational thinking person, but something dramatic could happen to you and it turns you into an emotional being. Let me explain. You're a normal person, you're not doing anything crazy, and all of a sudden something terrible happens to a family member. Okay, maybe they get in a car accident. You immediately become emotional. At that moment in time, somebody tells you what happened, you've lost rational thought and emotions have taken over. Why is this important? It's important because this manifests itself frequently in trading, right? You're rational. Man, that stock's a little bit extended. I'm not going to take it. Let's move on to the next stock. Oh, wow, look at this 3-bar play. It looks great. Blah, 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 blah. That's rational thought. As soon as you get into it, something happens. News report comes out. Whatever it is, an emotion creeps in. An emotion then begins to take over your rational thought. And you entered that trade using rational thought, but you're about to exit it using emotions. I'll repeat it. You entered that trade using rational thought. That's good. But you exit it using emotions. This is a problem. Okay? Now, fear can be useful, right? So, fear sometimes will keep us out of a bad trade. Remember, I always tell you guys, look for reasons not to take a trade. All right? But in trading, fear is usually very costly. I'm getting out because I don't think it's going to hit target, so I need to get out. So the question you want to ask yourself is your fear of loss stronger than your hope for gain? Because you cannot avoid fear. It's just part of life. Fear can be productive. It's why you look both ways when you cross the street. Fear. That's a good fear. Okay, but in trading, fear manifests itself usually in a negative way. Okay, so you have to approach it. You can't ignore it. You have to look at it and go, right now, I am fearful right now. And because I am fearful in this trade, I am going to step away from this desk and take a walk. Because I know by staying here, I'm going to do something bad. It's the same reason alcoholics stay away from bars. You should be fearful of that. Stay away from it. It's not a good environment for you. Okay? You have to acknowledge it because you can't hide from it. You have to accept it. But the power of emotion in trading is, oh my goodness, it's phenomenal. And phenomenal not in a good way. I mean, it's incredible what emotion does to us. And a lot of that emotion also comes back to what we believe when we started. So I'm going to relate this to yesterday. Okay? Yesterday in trading. All right? So this is a trade I took yesterday on Netflix. All right, you guys in the chat room, remember, you were here. Wide bar, narrow bar, rip. Now, is that a perfect 3-bar play? No, but we're not here to discuss that at the moment. We're here to discuss the fact that I took this trade right around 426. I had to stop around 424. And you see that little break right there, that topping tail break? See it? Thing broke over 426 and immediately pulled back. Look at it on the left on the 1-minute chart. Right over, immediately put. Bad break, emotions took over. What happened? because of the bad break, and good 3-bar plays usually hit and run, there's nothing wrong with feeling that. There's nothing wrong with saying it's a bad break. There's nothing wrong with that insofar as you don't react to it. That's the key. You can acknowledge the bad break, but you can't react to the bad break because my trading plan, well, it doesn't have a line in there to react to the bad break. So it came back and came about 3/4 of the way back down to the stop. Okay? So what did I do? When it got back to break even, I sold part of my position, and you can see it right there. Netflix, I bought 300 shares right there. I got filled at 426.23. Right at 426.27, I sold 100 shares of this because of emotion. It overran my logical thought. Now, did I have reason to be concerned? Yeah, a topping tail is reason to be concerned. But there's nothing in my trading plan that allows me to do anything about it. So I should not have reacted to it. But I did. And ultimately, it cost me a lot of money on this trade. About $400 to be exact. Okay? Because this thing ultimately went on to hit target. And that target was $4. And those 100 shares times $4 is $400. So it happens to everybody. The question is, how frequently does it happen to you? If it happens to you once every 50 trades, 30, 40, 50 trades, not a big deal. If it happens to you once every 2 or 3 trades, it's a problem. And did the same thing on another trade. Okay? Lulu, yesterday, we got in this thing taking a little bit of a sell setup right here. Okay? We were concerned about the 309 area, but we got in at 310, stopped 311. Okay? And this happens. Guys, this bottoming tail, by the way, means higher prices, period. There's nothing wrong with admitting that because that's what it represents. And we talked about going long at 311 on this, right? But that's not the topic of conversation right now. The topic of conversation is, to be fair, short traders should be concerned about this bottoming tail. But, and this is the key, if your plan says to stay in it, then you freaking stay in it. You can change your plan tonight or this weekend, but you can't change your plan in the middle of a trade. Can't do that. So if I see this bottoming tail and there's no rule in my plan that says get out, I can't get out because it's not in my plan. I can change the rule later, not in the middle of the trade. So you don't change your rules on the fly due to emotions. I did, right? I did, and it saved me. Now, why am I bringing these 2 trades up? Because in one trade it hurt me, and in one trade it saved me. And then on this particular day, it ended up being a wash. But here's the problem. Being a wash is bad. It's bad because it justifies my negative action. At the end of the day, I made money on Lulu and I should have lost money. At the end of the day, I cost myself money on Netflix. I made money on it, but I should have made $400 more. But the money I made on Lulu made up for that, and it was a wash. So I didn't feel the pain of breaking my plan. And you need that pain to change. Okay? So I'm well aware of what I did, and I am hopeful I won't make that mistake again, or if I do, it'll be a long time before I do. But it's usually better to not be rewarded for bad action. And this is one of the problems that a lot of traders have. They sometimes get rewarded for doing the wrong thing, and therefore they justify it. It's a problem. Okay? Now, mindfulness, which we've talked about, and this slide is in Professional Trading Strategies, and I've done this slide in another YouTube video before. Mindfulness is the capacity to be aware of your thoughts, beliefs, and biases in real time. Because emotion does not follow thought. Emotion comes before thought. Emotions are largely reactionary. But being mindful will help you to what? Control emotion. You can't eliminate it, but the recognition of emotion is basically called mindfulness. It's basically saying, I'm aware that I'm acting or I'm being emotional right now. So how can I, by understanding or through understanding, How can I not give in to those emotions? Right? So when emotion is triggered, there's a disruption of a familiar established pattern. Please don't PM me in the middle of a lecture. I'm not going to get to it. All right? So it's a disruption of a familiar established pattern. You're having a good day. You're having a good day. You're having a good day. Boom, little Johnny was in a car accident. Your whole world's turned upside down. It's a disruption of an established pattern. And that leads to stress, which leads to fear, which leads to bad decision making, which leads to improper trading, which leads to lost money. Do you see the tail end of the effect of that? It's like that scene in Good Will Hunting, right? Where he goes down and, what was the end of that? North Atlantic scrod is the only thing he can afford. Okay. Anyway, you guys get the point if you've seen the movie. One disruption in the pattern has a domino effect. So if we can nip it in the bud early and say, I'm not going to let this affect me. I'm mindful of what is happening. Guess what you do? You have less stress, less fear, and you won't make bad decisions. I am not here to tell you it's easy, because it is not. But you need to make considerations for it. You need to be mindful and then get better at controlling it. What was one of the things that Tiger Woods' father did to him when he was younger? Yell in his backswing, clap in his backswing, have people or a radio or whatever play during his backswing. Why? So it wouldn't disrupt his concentration. Because the disruption of that familiar pattern leads to what? Stress, which leads to a bad golf swing, which leads to a bad golf shot, which leads to what? Maybe shooting over par, which means not being the best player in the world. His father understood that. So he tried to what? Prepare him for it. We have to do the same thing. Okay? We have to do the same thing. All right? I'm getting really behind here. I got to move on. All right? So I'm hoping to end this in the next 5 or 10 minutes, but we got to get through about 6 slides for that. This is going to be good. Pre-contemplation, contemplation, preparation, determination, action, willpower, maintenance, relapse. This is the process you're going to go through, okay? Not yet acknowledging there's a problem. This sometimes could be confused for a victim mentality at times, okay? We all go through this at some point in life, and the best analogy I can give you is your parents telling you something at 16 and you yes them to death. Yeah, I know, Mom. You haven't really acknowledged there's a problem. You just yesed your parents to death to get them off your back. And your parents told you that because it came from a position of experience. Don't do that. I know where it leads. Right? And you yes them to death. That's what I consider this. It's not the same thing, but it's similar. Okay? And then the contemplation is acknowledging there's a problem, but you're not really sure you want to make that change. This is called maturity. Right? You're slowly maturing. You're recognizing there's an issue, but you're not ready to make the change. Okay? And then finally, as we say, the pain becomes so great, you're ready to make the change. But that still isn't making the change yet. It's like acknowledging there needs to be change, but you're not ready to make it. The first step is saying, no, everything's good. I'm not an alcoholic. Everything's fine, right? I'm not a bad trader. I take my stop losses even though you don't, okay? And then you recognize maybe I'm not as good as I thought I was, okay? And then after you recognize maybe I'm not as good as I thought I was, now you're saying, I need to do something about it. But you still haven't done anything about it yet. And then the action is doing something about it, changing your behavior. And then maintaining that changed behavior and then relapsing. Guys, is this not trading in a nutshell? It absolutely is, because we all relapse. The question is, how bad is the relapse? Is that relapse an egregious relapse where you don't take a stop loss and it hurts you to the tune of, say, minus 20 or 30%? Or is that relapse like I did on a trade yesterday? Man, I got out too soon, but it's not the worst thing in the world. It doesn't happen that often, right? Maintenance is challenging. People, places, and things is what they tell you, right? When you're a drug addict or an alcoholic, people, places, and things. Trading is no different. Have a trading buddy to help you maintain that willpower, to help you maintain positive, correct action. Accountability is important. Consequence is good. It keeps us on the straight and narrow. I think we can all agree without consequence in life in general, we would do some pretty bad things. Okay? We can't just believe we're all good by nature. We're not. Okay? We're not. All right? All right. Optimism means expecting the best, but confidence means knowing how to handle the worst. Never enter a trade if you're merely optimistic. Basically, it's saying don't just drink the Kool-Aid. Don't just have hopium. Okay? Now, I want to go over one last thing, and I'm going to have to end it on these couple things, even though I may not get to all the slides, but it is what it is. I found this fascinating. I read this study about 10 years ago with Kahneman and Tversky. So there's a couple pieces to this, but it's just to get you to think for a second. It's just to get you to think, okay? So they're researching and investigating apparent anomalies and contradictions in human behavior. Okay, so here's a couple talking about risk aversion versus risk-seeking behavior. So for example, some people might drive all the way across town to save $5 on a $15 calculator, but they wouldn't drive the same distance to save $5 on a $125 coat. Perceived value potentially. Maybe it's perceived value, but $5 is still $5, right? That's a smaller example of the bigger picture here, all right? So they're working in demonstrating that people's attitude towards risk concerning gain is different than their attitude concerning losses. I'll repeat that. Your attitude concerning gains is different than your attitude concerning losses, especially as it relates to risk. Okay? So here's the example. Given a choice between getting $1,000, there's a 100% chance you get $1,000. Somebody's just going to say, here, you can have $1,000 or you can flip a coin for $2,500. I'll give you the 1,000 now, or we can flip a coin and I'll give you 2,500 if heads comes up. Okay? Even though the expectation is a loss, right? $1,250, you should flip the coin. All right? People found 50%, right? A lot of people found they'll take the $1,000 with certainty. Okay? They'll take the $1,000 with certainty. The vast majority of people took the $1,000. Okay, see? And look at you guys. Give me the $1,000, and some of you go, oh, I know the odds, I'll take the coin flip. The vast majority of people took the $1,000. Okay, but now we flip it. Now you have 100% chance of losing $1,000, 100% chance of losing $1,000, or a 50% chance, okay? I just misread that completely, didn't I? They found the same people when confronted with a certain loss of $1,000 versus a 50% chance of no loss or a $2,500 loss chose the riskier alternative. Think about it for a second. So you did the exact opposite with making money versus losing money. You took the guaranteed 1,000, but you were willing to flip the coin when you knew you were going to lose 1,000 for sure. Think about what I just did there. That doesn't make any logical sense. So it's called risk-seeking behavior. And it shows the what? The asymmetry of human choices. We don't make logical decisions all of the time. I know, newsflash, we don't always make logical decisions. Just, ask any married man, all right, about their spouse. Oh, wait, I'm going to get in trouble for saying that. Anyway, the point is depending on what is to gain or to lose, changes how we view things. Not necessarily based on logic. I'll repeat. Depending on whether we're going to win or going to lose, changes how we view something, but not always based on logic. All right? So a lot of us have risk-seeking behavior. We just don't think about it, depending on the position we're being put in. Okay, one more. All right? So, here's a quick study. Richard Thaler. Students were told to assume they'd won $30, meaning you just won $30. I just gave you $30. They were offered a coin flip in which they could win $9 or lose $9, which basically means what? You have a 50-50 chance of having $39 or $21, right? You already got $30. I've given that to you. Now you're going to flip a coin. If you get heads, you get $39. You get 30 plus 9. If you lose, you get 30 minus 9 is 21. 70% of the students opted to flip the coin. 70%. However, when students were offered $30 for certain versus a coin flip in which they got $39 or $21, only 43% chose it. Can you explain to me what the difference is between those? The answer? Absolutely, positively nothing. Right? I mean, there's really no difference there. There's a small difference there, but it's in theory the same thing. Right? Optics, exactly right. Well said. The optics of it. But almost, not quite, twice as many people, 80% more people, chose to do it when they had the 30 in their pocket, but not. And you're sitting there going, well, you're going to get 21 or 39 anyway. Why didn't the same number of people do it? It's very fascinating, isn't it? So the problems of interpreting human behavior in the face of risk has to do with what? The problem of people making decisions, and this is important, on the basis of subjective assessments of probabilities, which may be quite different from the objective or true probability. I'm going to wrap this all the way back to trading. It's just a coin flip doing 2R all or nothing. Unmal tells you guys every day, 2R all or nothing. I'm just flipping coins, guys. I'm just flipping coins. That's an objective viewpoint of his probability. But some of you have a subjective assessment of it, so you get out before 2R, you raise your stop loss, or do whatever you're not supposed to be doing because of the optics of it, the viewpoint you had. How many trades, guys, have you taken on pure subjectivity? It looks strong, it has to go higher. Oh, they crushed earnings, I know it's going to work. Oh, have you seen the new product they came out? It's killer, the stock's just ready to blast off. It's so extended. It has to pull back. I'm going to short it. Of course it's got, dude, it's up $40 today. It's got to pull back. I'm going to add more shares on the way down because the fundamentals are just so good. You know damn well you've done some of these things. Subjective assessments of probabilities. Purely subjective assessments of probabilities. Not the objective or true probability. That creeps into your trading way too often. Okay? So, comes down to this, and then I got to skip some slides and end this. It comes down to this. The more objectively and accurately you can define yourself, the more recognition and honesty you have with regard to how emotions creep into your business, your belief system about this business, being a victim or not being a victim. The more objectively you can define that, the higher and greater odds of success that you're going to have. Okay? Because at least by being honest, you can address it. If you're not honest, you're not willing to address the situation, which means you can't change the situation until you objectively address what's really happening. Okay? So accepting and understanding your strengths and weaknesses is key. It doesn't mean you can't improve upon them, but you have to accept them. Remember, at the end of the day, the outcome goal is not as important as the process goal. The process is what leads to the outcome. You never get to the outcome without the process. And trust me, you'll never get to that outcome that you want to get to by being a victim, not assessing yourself, and not fully appreciating and respecting the impact that emotions play on trading. Okay? How can you combat some of this? Track your trades, review the statistics. Have a trading buddy review them. Have somebody that's completely objective take a look at your trades. Also, have a consequence system. There has to be some level of accountability to all of this. All right? There just has to be. Okay? Nope, not going to go there. Nope, not going to go there. No time. All right, here it is, and this is the last slide. Guys, the man in the mirror, the woman in the mirror, the person in the mirror is the answer to all of your successes and failures. That's it. The market's an equal opportunity lender, so to speak. Thus, the outcome is completely up to you. There's nothing else you can blame it on. Period. You can't blame it on society. You can't blame it on economic status. You can't blame it on culture. You can't blame it on race. You can't blame it on anything. The market just is. It just is. It's the greatest meritocracy in the country, in the world. So it's equal opportunity for everybody. The outcome is purely up to you. Don't be a victim. Don't play that role. If you do, you're not going anywhere in life in general, but specifically in trading. Along those lines, make the acknowledgments of your pluses, minuses, failures, successes. Take them all, put them in a bucket, own them, and then move forward, okay? So that'll do it for this week's lecture. I went a bit past, like 10 minutes past what I normally do. I told you there's not many slides in it, so I hope I kept your attention for that period of time. Guys, honestly, I could have gone 2 more hours on this, easily. All right, there's a lot of things I glanced over or shortened up because of the time constraints, all right? So I hope that you guys enjoyed that lecture. We'll get back at it again next week. Take care, guys.
To get more great educational content, subscribe to the Live Traders YouTube channel. This way you'll get email alerts every time I upload a new video.